Startuprad.io, your podcast and YouTube blog covering the German startup scene with news, interviews, and live events.
Hello and welcome everybody. This is Joe from Startuprad.io, your startup podcast and YouTube blog from Germany. Every year, shortly before Christmas, we get together with Fintech entrepreneurs, event organizers and thought leaders to look back on the year and forward into the new one in our annual Fintech review. This is a tradition I'm hosting since 2014. You can find here in the playlist on YouTube as well as down here in the show notes the last 3 ones in English. This time we changed a little bit the concept. 2020, nothing stays as it is. We did the following. We talked to all 3 of our guests separately and only asked them 3 simple questions. Then we added 10 together. This doesn't unfortunately lead to any of the interesting discussions, but it's a little bit more compact format. The 3 questions were: what are your top 3 fintech news items from 2020? What do you think is the medium to long-term impact of Corona and 2020 on fintech? And what is your outlook for fintech, especially in 2021? Let's see how they answered. Guys, what are your top 3 fintech news items from 2020?
I think 2020 was an exceptional year under many aspects, certainly for fintech. First of all, the Financial IPO that was blocked by the Chinese regulator 2 days before that happened. That is really unprecedented because it highlights the limitations of big tech companies in terms of accessing financial markets and providing opportunities to individuals, small, medium entrepreneurs without hitting on the problem of financial stability. So we might expect there will be more regulation in China and outside China about the functioning of big tech, which will have an effect, an impact on the way fintech will have to operate going forward. The second is again about big tech. At the end of this 2020, the relaunch of Google Pay under a new, more integrated solution and look and feel, and the announcement of their Plex service next year that aggregates the interest already of more than 10 financial institutions. This is also a great piece of news. It highlights the capability of big tech to penetrate the banking sector, providing, I believe, banking infrastructure by inviting financial institutions to onboard on their capability to connect them to final consumers. So I don't think that here we are discussing the competition between the big tech and the financial institutions, but an acceleration of the capability of financial institutions to play with technology in terms of accessing the capability of large providers of financial services solutions in order to improve their operations. And then the third, and I wouldn't say the least, but we only wanted to discuss 3, is the final decision of the Monetary Authority in Singapore to award for proponents a banking license. We have 2 full digital licenses now given to Grab, Singtel, and SEA. And we have 2 wholesale digital banking licenses provided to Ant Financial and Greenland Financial Holdings. Here and again, there are 2 players which are entering Singapore with a digital banking license. So in essence, the platformification of financial services from within China is expanding to the Western world. 2021 is going to be very interesting. If I can just add a little fourth or a 3B, I would say that this year Starling Bank is finally achieving profit in their operations. That's very important. Starling, to me, is very different to the other neobank and challenger banks because they have a more clear focus on small entrepreneurs, that type of businesses. I always highlight the relevance of understanding the motivation of finance clients to onboard on digital not simply on freemium models, but on business models where they're asked to pay for the services they receive. And it seems that Starling, owning this slight difference compared to the others, showcases that this is the way forward, because before other competitors managed to improve their financial situation.
I really love that you added a 3B news item. One question from my side. Did you dig a little bit deeper into why Starling was actually profitable? And do you believe it's the blueprint or the way to go forward for banks like N26, Penta, or other challenger banks in other countries or geographies?
Well, you see, many fintech entrepreneurs, I'd say Silicon Valley in general, misunderstood the asymmetry of information that dominates the revenue generating mechanism in financial services. So mobile technology, I insist, is a pull technology, a technology of the demand, while most of the services that banks provide to their customers, especially where the revenues matter today, are operated in an offer-driven mechanism. So the problem is how you move, how you basically take an offer-driven industry, which is pushed, into demand-driven technology where clients have to pull. Now, you need to look at the symmetrical offers where people feel they have a pain point they have to resolve and they are willing to pay for that. Now, payment methods, they can become convenient and very attractive, but people typically don't want to pay for payment methods. You see what I'm saying? As long as they really feel like they get extra, like American Express with the membership reward, is so much 1990s, put it this way. But entrepreneurs, they have their pain points in front of themselves every hour of the day, especially through the pandemic. You don't think about, for example, your retirement and investment product continuously. Very few people do that, but everybody working is thinking about their business problems throughout the day. Therefore, if you target those communities, you have more chances to resonate so that you can see the clients might onboard and they're willing to pay for value that they receive, because effectively they resolve some real critical points in their business journey. And that is, I believe, the little element more than anything else that tells the Starling story apart from other challenger banks and other neobanks. Then, of course, there might be other type of business decisions that were made. But I insist that we need to look at the foundations of the way people access financial services on the asymmetry of information, and therefore their willingness to understand or perceive value, so to pay for that.
So what did strike me first was that cash is still relevant. So in context of digitalization, that's actually the last thing you would think about. So it did strike me that month by month, the amount of cash in Germany is still increasing. So the volumes overall are increasing. Of course, if you look from a percentage point of view, cash loses, but in absolute numbers, cash increases month by month in Germany. And I did come across a startup who transforms cash machines and cashiers into digital ATMs. The company is called Songmic, and that was my first big surprise that's already or still happening in 2020. The other big news for me was Fintech Forum must go digital. So we always look about digitalization of the financial industry, but our own event was a pure physical one. But this year it had to be transformed into a pure digital one. And I can really tell you, my own digital learning curve was really steep, and I learned a lot, and I had to learn new things. I need to transform the way we approach the delivery of the Fintech Forum. So that was the second big event and the second big news for me. And finally, I was surprised by especially one startup in the crowdfinance space, Capilendo. They actually transform part of their business model in order to help SME companies to get governmental support. And they did that rather quickly. And I have seen more and more startups really taking the challenge in order to support the overall community in Germany. So these are my three news. So cash still relevant. Yes, I need to become digital by myself personally. And there are some startups out there who are able to really quickly transform themselves.
I think there's just a main just one news that encompasses maybe all 10, which is just the fast forwarding of the inevitable, which is bringing what's offline to online. So anything that's currently banking and that's offline is just accelerating and becoming online. No, I think you can absolutely automate everything. I think it's just a matter of, it's a question of time and logic that you can do that.
Okay. And what do you think is the medium to long-term impact of Corona and 2020 on fintech?
So the pandemic outbreak is an unfortunate event, of course. There's nothing positive about that. But I think that it is also accelerating digital adoption, which in essence is good for those targeting the transformation of banking with mobile technology. So let's say that from the negative side, uncertainty is on the rise on financial markets. And when uncertainty is so high, the capability of players to be offer-driven is reduced. That means the evaluations cannot stay where they were before the pandemic outbreak. And this is hitting most likely the way funding is accessed by fintech entrepreneurs, and if not, the full availability of funding itself. I heard many investors pulling the brake at the beginning of this year, trying to understand what was effectively going on before deciding to move into new ventures. So it may be that the established players that already got funded might find a chance for a new round, but it will be more difficult for the newcomers to access fresh money. At the same time, we said that the pandemic has accelerated digital adoption in the society, with particular reference to the Western world, as we know that the Chinese consumers were already highly digital. And this is putting extra pressure to the banks to change the way they provide their services to the final customers. So definitely not necessarily the fintech having more clients, but all those fintech providing B2B or B2B solutions should find themselves into a new environment starting from 2021, where I believe there will be more substantial and practical demand beyond the POCs to effectively deliver in production new banking services using digital technology. And if I can also highlight, this is the third year, for example, of the growth of digital platforms in India. I had the chance of working with SBI Yono as IBM, which is a very interesting applications and marketplace that was launched by State Bank of India. Now, we all need to look at that because often we talk about China and we don't talk much about India. But this is a great example of building a platform marketplace that engages clients on non-banking products and then uses their relationship to turn the clients into a banking relationship. And this is exactly what the fintech and the banks have to learn to resolve. How to recombine with contextual banking the non-banking with the banking charters. We saw in the last 2 years the first real-life examples being brought to market, and some of them, like this one, very successful. And I believe that 2021, 2022, up to 2025, we'll see the acceleration of these type of approaches and solutions, which are definitely needed.
From my perspective, the pandemic and Corona is accelerating everything which is related to digitalization. So stuff which takes in normal times 2, 3, 4 years now happens in 2-3 months. So we see in areas of payments and contactless payments and, let's say, digital loan, we see significant increases across the world. So we not only see the online merchants and Amazon growing like hell, but also the underlying infrastructures as well as the financial service infrastructures, including fintechs who are prepared to scale. And that's for me the prediction. First of all, the lessons learned, but also the prediction for next year. The ones with a proper business model will benefit. The ones with a bad business model will fail. So we will see some will succeed faster, other will fail faster. So the acceleration of what would happen normally. That's the big topic also for the next 2 years.
From a digitalization perspective, I think that the vaccine coming out earlier is actually a bad thing. Again, I want to emphasize from a digitalization perspective, because it's not forcing, or essentially it's allowing certain companies to go back to the old ways quicker than before. I still think Corona is going to be impacting our lives for the next 5 years or the foreseeable future. But I think it's important that we just speed up that digitization of bringing things from offline to online.
What is your outlook for fintech in 2021?
In 2021, I did, among the many works I did worldwide, an interesting one with the Chinese bank. There is a strategic point of view for the board of directors of Shanghai Pudong Development Bank, which is the 8th largest bank in China, as big as Deutsche Bank. That means not that big of a bank, but the most digital among the urban banks. And we wrapped up this strategic work into a public white paper, which has been published at the Ant Financial Conference in, when was it, October this year, October, November, in Shanghai. And the title of this white paper is Panoramic Banking. Now, it is published in Chinese only. There's not an English edition. But I think this is very important because finally we have a consistent point of view about the platformication of financial services. So between 2010 and 2020, which are, let's say, formally the first 10 years of the fintech innovation, we saw a lot of simple-mindedness in the fintech ecosystems. So small fintech, some of them growing fast, wanted to unbundle financial services into leaner offers and more simplified solutions. However, this is not the end of the game, and actually is a faulted starting point, because digital reveals that only platforms can effectively thrive. So I think that now many are getting into the understanding that what is needed is not to unbundle financial services, but to bundle them back. That's why I'm very proud of this work that we released at the end of 2020, because from 2021 to 2030, I believe that we will see this shift from unbundling to bundling back, therefore the rise of platforms. So it is very important to understand what it means to shift from the linear economy, that is an output economy, into the non-linear economy, which is made of outcome economies. And only if banks and fintech understand that, they will learn how to build platforms that enables to aggregate the life of individuals and entrepreneurs in different ways. If I can say to conclude, I've always been critical at the idea that you can unbundle a bank because banks are already unbundled into different business units. And I've always been critical at the fact that we started looking at fintech by morphing their offers around unbundled banks, like people talk of pay tech, of credit tech, of insurtech, of wealth tech, but in reality is all about client tech, because the client is only one. And that is where you see the capability of platforms of treating the client in his own uniqueness and centricity. If I can add, we also need to transform the client centricity into human centricity. That means stop thinking that artificial intelligence and data are there to optimize distribution channel of products. That means putting the client in the center and becoming smarter at doing marketing, because this is not e-commerce. This is banking and financial markets, highly regulated, there to make sure that our society functions in a democracy and in a capitalistic world. We need therefore to start learning that what data and analytics are for is to enable clients to be capable of self-directing themselves on the platform economy. That means being human-centric, because it's not anymore about data-driven banking. It becomes data-enabling clients. And that's my wish for the next 10 years.
Yeah, that's basically my assumption, that maybe not next year alone, but definitely next year will be a very important year. Anyway, we were at a kind of crossroad for fintech, because fintech around for 10 years, 12 years now, in Germany maybe 7 to 10 years. So we already have seen 300 fintechs disappearing from about 1,000. So that's something I expect to accelerate actually over the next 2 years. As said before, acceleration of time, that's probably what we all need to understand.
So Megan Johnson actually wrote a good article called "The Banks Are Dead, Long Live the Banks," and I think that's never been more true. I actually think that it's a super crowded market. I think less newcomers are going to come out. I think that the existing players are going to be doubling down on general innovation in fintech. So if I was a fintech entrepreneur, for most cases, I'd probably leave out trading from that. But other than that, I probably wouldn't start a fintech company. So I think that people need to take a long-term outlook. I think people are too short-sighted when they think about challenger banking. If you look at, for example, the oil boom in the late 1800s, and everybody thinks now, wow, that's obvious. So it's the same thing now. It's it's the second time in history that banks are being recreated. And if you extrapolate and think about what is banking in 10 years from now, or maybe even 20 years from now, there's absolutely no doubt that it's online and that it's digital. So whether that's a challenger bank like one of us or a Deutsche Bank, that's up for question. But it's the same question like, will there be more electric cars on the road in 10 years from now? Absolutely. Will Tesla be one of the winners? Most probably.
Thank you so much. Leave us feedback via Google Forms in the comments below here, and don't forget to like and subscribe. Frohe Weihnachten, Merry Christmas. We will be back on January 7th with our interview of Bitbonds. Bye bye.
Frohe Weihnachten.
Yeah, thank you for your time, and happy New Year to the audience.
Absolutely. Thanks.
Bye-bye.
That's all, folks. Find more news, streams, events, and interviews at www.startuprad.io. Remember, sharing is caring.